Hi, I'm Aaron Young. You are watching Ticker Today. Now, the Reserve Bank of Australia has met their September meeting and decided to keep interest rates on hold at 4.1%. But what does it say about the economy? I'm Aaron Young. Let's find out.
Now, from our headquarters at Ticker Park, this is Ticker Today.
Right around the world, it seems that Western reserve banks and Fed reserves are taking a bit of a wait-and-see approach just to try and find out exactly what has been happening in the economy after their record number of interest rates over the past 18 months, trying to deal, of course, with rapid inflation. In Australia, the Reserve Bank of Australia, the governor who is now departing, Philip Lowe, deciding that they will keep interest rates on hold 4.1% again. No doubt wanting to find out what may happen in China. In fact, buried deep within the minutes from that meeting is a bit of a concern about what's happening with the property sector in China and the potential flow-on effects from that, given Australia, of course, is a pretty big client, and so is China in the other direction as well. To get some more info on this, we're joined by Will Banks from Shillings Capital and also Matt Grudenoff from the Australia Institute. Gentlemen, great to have you with us. Matt, I'll start with you first. What did you make from this decision by the Reserve Bank? What does it say about the strength of the Australian, perhaps the Chinese economy as well?
Yeah, I think that it means that inflation is really slowing in Australia. The Reserve Bank is happy with how it's coming down, but also that they are concerned about the economy. There's good news and bad news in this decision. The good news, inflation is slowing down. The bad news is that interest rates on hold means that the Reserve Bank is starting to worry about the economy. The economy is definitely slowing. We're going to see that again with the new GDP figures. And China is the big kind of unknown, particularly all across the world. It has not fired the way we thought it would after it emerged from those lockdowns. And there are real concerns that it's not going to fire.
Well, a couple of months ago, you and I were talking about this very issue, and we were predicting what might happen next year when it comes to interest rates. Given the ongoing concern about what might be happening in China, are you willing to bring the prediction of interest rate cuts from next year forward to potentially this year?
Yeah, I agree with Matt, but I also feel that maybe I don't think necessarily that will be the end of an interest rate increase. There could possibly be another 25 basis points increase, but that would depend on how the economy is looking maybe over the next few months. In terms of bringing it down and the rate cut, I think it is unlikely that it will take place this year. I think I still maintain that if it is going to come down, it will be over probably the next month, starting in January of next year.
Now, Matt, when we have a look at the Chinese economy, there have been some big concerns about the property sector, about whether or not they've actually miscounted the Chinese population to begin with. And now the situation of rolling number of these huge property groups that now seem to be unwilling to be able to pay back their bonds, to pay back their debt. We've seen a restructure of one of these companies just this week. What do you make of what's happening in China? It seems to be somewhat predictable, given we've been watching what's been happening with Evergrande now for about a year.
Yeah, it is. And look, if it was any other economy, you'd say it was in dire straits. It's just that the Chinese economy has been predicted to fail for a decade now, and, you know, at various different times. And so I think people are reluctant to say, yes, look, this is a huge problem. It's, you know, there's definitely going to be a crisis, but things are not looking good. If that debt spreads across the economy, we could see the Chinese economy really slow quite dramatically. And that would have big implications in Australia, but big implications all across the world. China is a big supplier and buyer of stuff from all sorts of countries, and that's likely to slow the world economy.
Well, talk to us about what you think the impact will be on the Australian economy, given that when China buys a lot of stuff, particularly for the housing property market in China, it's a lot of iron ore that comes from Australia. We've seen just recently the federal Labor government in Australia, the Albanese government, being able to make some gains in that budget repair because of the huge price of iron ore and coal, number one customer being China. They stopped buying. What happens to Australia's economy and the Australian dollar?
Well, the Australian dollar will decline. We've already seen that with some of the sentiment coming out of China, that the Aussies have been hitting quite a few kind of record lows. It has actually kind of recovered a little bit because of the Chinese mentioning that they were looking at some kind of stimulus. But ultimately, yeah, I mean, the Australia is pegged quite heavily to the Chinese economy, and therefore, if the Chinese economy is struggling and it's less likely to buy exports from Australia, then the Chinese economy will have issues. I think as a positive point, though, and just taking Matt's point around having an international impact. I mean, bearing in mind that the RBA has now put interest rates on hold, I think is a good sign. When you compare it, let's say, to the Fed, the ECB, and the Bank of England, they're all still sitting on the edge of their seats, looking at putting up another rate maybe over the next month or two. So there will be an impact, but I think that the economy is starting to recover a bit. So I think we'll just have to wait and see.
All right, let's talk about one of Australia's favourite pastimes, and it's bagging the national carrier Qantas, and perhaps with good reason. Over the past couple of weeks we found out about seats for sale that shouldn't have been for sale. Also there's Qatar, an airline that wants to fly into Australia, but the federal Labor government, Catherine King, who's a transport minister, bizarrely says we don't really like competition in this country, let's keep them out, banning them from being able to add additional services when none of us can get to Europe, or those of us who've come back can't fly again because of the rising cost. Alan Joyce, the CEO of Qantas, has been there for 15 years. He was hated by a lot of people for jet starring, as they said, trying to turn Qantas and standing up to the unions. I think a lot of people never forgave him for that sudden grounding that he did back in, I think it was 2010 or 11. Matt Goodenough, I'll get your thoughts on this to begin with, because Alan Joyce leaves 2 months early from when he was due to retire. Was it the right thing to do?
I think it was a circuit breaker. Qantas's reputation was in freefall. They had legal woes, they had reputational woes, they had all sorts of problems. And they hoped that by him leaving 2 months early, that basically this would sort of clean or wipe the slate and reset. But I think what we have is a problem is, and economists like me bang on about it all the time, it's a lack of competition. When you have big firms that dominate a market, you have firms that behave badly. Not always illegally, but they definitely behave badly.
Well, then how do we explain Qatar? Because that was an option to be able to bring in some more competition. The airline industry is a really easy one when it comes to competition. It's allowing more international carriers to fly in and out.
Yeah, look, absolutely. And big firms make big profits, and they invest those profits into relationships, including relationships with governments. And, you know, Qantas has the ear of the government, and they're able to go to the government and talk to them when they're making those decisions. Imagine it was a highly competitive sector with lots of firms that were a lot smaller. Those firms wouldn't be able to go to the government and lobby them to try and keep more competition out. Competition keeps firms honest, and it stops this bad behaviour.
Well, I want to get your thoughts on this as well, because if you look at the role of a CEO, they generally, particularly an airline, they generally have three responsibilities. One is to keep revenue flowing. Two is to keep costs down. Three is to obviously keep safety. Now, when Alan Joyce leaves after 15 years, they've beaten the street when it comes to how their share price has been performing. There've been no crashes, and they've just made a $2.5 billion profit. Why does he leave with such a bad reputation?
Well, I think that's another part of it. It is reputation. I mean, I think that's another responsibility that they have. And I think there's, they're being investigated by the ACCC. They've also made people redundant and then moved into kind of people be kind of self-employed and kind of undercutting
the baggage handlers, right?
Job market. Yeah. So I think it's outrageous. I mean, in the sense that they're trying to stop Qatar from coming in and offering an alternative solution. I mean, how they can say, well, actually, it's going to likely to bring up the price of flights. That doesn't make sense. I mean, you look across Europe where you've got cheaper airlines. It's actually brought the price of travel right down. And I can't help feel, to a certain extent, that one of the reasons why is because the government is invested. They're completely invested with a $2.7 billion out by the taxpayer to support that airline when the airline now is making record profits. When should they be paying some of that? So I think it probably is the right time that he goes. I think if he wasn't, then you might find that he would have been ousted by the shareholders on the basis that sentiment is now hitting a low and the share price is going to get it.
There's a lot of people very concerned about the reputation of the national carrier, even though it isn't owned by the federal government anymore. Matt and Will, appreciate your time. Thank you so much. And that is a program for now. For more, you can head to tickernews.co. I'm Aaron Young. Do hope to see you soon.